Our next guest is, quote, optimistic that the current pessimism is set to fade away in the year ahead. Moody's Analytics chief economist Mark Zandi joins us now. The pessimism is already fading here in this year-end rally. Mark, where do you see pessimism?
I agree with you, Sarah. I think the pessimism is fading away. I mean, clearly a year ago, I think everyone was on high alert, hair on fire. But with the better inflation statistics, the good economic news, that pessimism is fading away. Although you look at the surveys, I'm a little perplexed by it. Like, go take a look at the blue chip survey. I think the typical economist is still expecting, almost a 50% probability of recession starting sometime in the next year. Maybe that's going to change as we move forward here pretty quickly, but still some pessimism out there. But I agree with you; the pessimism is fading away.
And I have to give you credit, Mark, because I remember you came on during the times where there was so much hand-wringing over recession and the unemployment rate going higher, and you said, nope, I don't see it. I don't see stress in the labor market. It's a soft landing. You were out front on that call. You were right. Does it stay through 2024? Can the Fed really stick the landing?
Well, you're so kind to bring that up. I actually remember.
I remember. We had like a heated argument.
Yeah, we were on set at the NYS. Where were we? I think we're at the NYS.
We were here.
Yeah. And there was such pessimism, I remember, and I went on a little bit of a rant. But fortunately, things have kind of gone my way. It's a little early to declare victory. I think, we can only do that when the Fed actually starts to cut interest rates. I mean, all the trend lines look really good. I heard your conversation around inflation and the growth in the cost of housing services. That's going to come in. I feel very confident in that. And rents, which drive the growth in the cost of housing services, will continue to be weak because we have a lot of multifamily supply coming into the market in the coming year. Vacancy rates are going to rise, and that's going to put downward pressure on rent. So I feel very confident that we're going to see inflation back close to the Fed's target by this time next year. So all the trend lines look really good here, but still, probably a little early to declare victory.
Mark, Bob Pisani here. Happy New Year. You were talking about all the optimism out there. One of the issues, of course, when you get all this optimism is the market tends to get a little pricey. It's not terribly attractive from a valuation point of view right now. It's almost 20 times the S&P, 20 times 2024 earnings estimates. We're expecting earnings to grow 11 or 12% next year. That's on the high side of the historic norms here. Does that worry you at all? There's a lot of stuff that's moved up since November that used to be extremely attractive. That's now sort of middle of the road, and some stuff that's arguably overvalued.
No, not so much, Bob. I mean, I think you know better than I, but I think if you take out those top 7 stocks, right, the so-called Magnificent Seven, valuations look more kind of in line and typical, maybe on the high side of fair value, but nothing really out of bounds. It's really those high-flying, AI-driven, tech stocks. But that has its own dynamic, its own story. You could make your own decision about that. But the rest of the market looks like it's okay. But my sense is that the valuations are roughly where they need to be, assuming the Fed does cut rates next year as the markets anticipate, and assuming we don't suffer a recession, which I think is at this point a pretty good forecast. I think we get kind of middling returns for the S&P 500. We got a boatload of returns in the last year, as you were pointing out. A great year, but I think in the coming year, I think let's put it this way. I think if you're a prudent investor, saver, planner, you kind of assume mid-single-digit kind of returns in 2024.